So it's the last week of the first session of the 114th Congress, and the House and the Senate are trying to get out of town for the holidays. They've got the Omnibus Appropriations Bill and the tax extenders legislation. We're paying close attention to the Omnibus Appropriations Bill because there is a chance that there'll be some policy riders on that bill, and we've got a number of regulatory relief provisions that are in the mix. We're really close to the end, and it's possible that there won't be any financial services provisions on the bill, but we're looking for things like qualified mortgages being held in portfolio, examination fairness, some provisions related to government guarantee fees on mortgages. All of it's possible, and we're at a stage in the game where it's kind of frustrating from an advocate's perspective because we've worked so hard, we've gotten this so far, and at this last stage, it's really up to negotiations between leadership. So we're going to wait and see what's in that bill, and if there aren't provisions for us in that legislation, we'll get right to work on that again next year. So even if we're not able to get any provision into the omnibus bill, 2015 has been a really productive and successful year in credit union advocacy. A couple of weeks ago, we were able to get 3 provisions into law. One modernizes privacy notification requirements. Another makes privately insured credit unions eligible to join the federal home loan bank system. And a third that sets up a process for designating rural areas for purposes of CFPB regulations. So 3 provisions that really reduce regulatory burden, but there's been a number of other things that have taken place too. We, even though we opposed the risk-based capital proposal, we did a lot of work to improve that proposal so that it doesn't adversely impact more than a handful of credit unions. And as part of that process, we've teed up supplemental capital so that there's a possibility that we'll be able to use that for risk-based capital purposes, and we might be able to leverage that in the future for PCA purposes. So a positive step forward. We've also advanced the ball on member business lending and field of membership. We've got a fantastic proposal from the NCUA that will allow credit unions to do more business lending. It'll help them serve their business lending members even better. That's going to be finalized early next year. And the field of membership proposal that NCUA finalized, or that they proposed in November, we expect will be finalized early next year. And that's going to be very positive in terms of consumer access to credit unions. So a lot's been accomplished at NCUA. We've also kept some bad things from happening. For example, Senator Elizabeth Warren has been pushing legislation that would allow NCUA to examine third-party vendors, and we've kept that off a number of pieces of legislation. Likewise, when Congress proposed requiring credit unions to send 1099s to all deposit account holders, we stopped that effort. They were trying to do that to pay for a trade bill, but we kept credit unions out of the trade bill. That's very positive. The other thing with respect to NCUA is the action we've done this year has allowed us to increase transparency over the budget process. So for the first time in a number of years, we had an oversight hearing in the House Financial Services Committee on NCUA's budget. And we're looking forward to having a similar hearing on the budget next year. It's not quite the hearing that we've asked for in legislation, but it's a positive step forward to ensure that the credit unions that fund the NCUA's budget have some form of oversight over how that's used. Also on the legislative side, we've seen 20 credit union supported bills go through the House Financial Services Committee, and a number of them are in play for that omnibus. So it's been a very positive year by all accounts in credit union advocacy, and we're set up to do even more next year. So we're going to hit the ground running in 2016 with field of membership and member business lending. Both of those proposals still have a little ways to go before they're finished. So we'll hopefully see the member business lending proposal finalized in the first quarter. We've got the field of membership comment period that goes until February 8th, so we need everybody filing comment letters, participating in that process so we get the best possible rule. We're also keeping a really close eye on the Consumer Financial Protection Bureau. We expect 2 major rulemakings from them in the first part of the year, one on payday lending and the other on overdraft protection. Now, we've been talking with the Bureau about these proposals for several months. We've had a number of credit union groups come to Washington to talk to the Bureau, but next year, this is where the rubber is going to meet the road on both payday lending and overdraft protection. We're also keeping an eye on two proposals at the Department of Labor, one on the definition of fiduciary and the other on overtime. These proposals have the potential to have tremendous consequence for credit unions. That's why we weighed in with the Department of Labor a number of times in 2015, and we're going to need to keep our advocacy up on that issue in 2016. Likewise with the FCC's robocall order. This is having an immediate impact on credit unions right now. It wasn't done through the normal rulemaking process, which is why we're not only asking Congress to take a look at it, but we've also filed briefs in court challenging the FCC's ruling. This is going to be a big issue that credit unions are going to deal with next year. And last but not least, we can't take for granted the credit union tax status. Federal, state government budgets are under pressure, and the banks are going state by state to try to get us taxed. We need to continue that fight, whether it's in Iowa or Illinois or Idaho, wherever the fight is. We need to stay engaged because if we're not speaking for credit unions, who will?